major shift is happening in the home loan market, and it could directly impact your buying or your selling plans. Federal agencies have introduced new eligibility requirements for government-backed loans that will change the game for many prospective homeowners. If you're in the market right now, here is what matters. Non-permanent residents, including those with work visas like H-1B, L-1, O-1, student visas, and individuals with temporary protected status will no longer qualify for FHA and USDA loans after May 25, 2025. This countdown creates both urgency and opportunity depending on which side of the transaction you're on. Changes affect several key loan programs. FHA loans. Non-permanent residents will be shut out after the May deadline. USDA loans. The same restriction applied to this rural housing program. VA loans. Now, it will require lawful permanent residency. Home Ready and Home Possible programs are Fannie Mae and Freddie Mac initiatives, so they will face potential elimination as well. If your home falls in the 400 to 500 range, which is a prime FHA buyer sweet spot, your buyer pool may shrink. With fewer qualified buyers in the market, you need to adjust your pricing strategy to attract conventional loan buyers. You need to consider seller concessions to offset higher down payment requirements. You need to be prepared for a potentially longer time on market. And lastly, you need to work with an agent who can market to buyers with various financing options. If you're buying, these changes will create different scenarios. If you're a non-permanent resident, you have until May 25, 2025 to close on FHA or USDA loans. So start your home search immediately and get pre-approved now. Consider accelerating your timeline even if you weren't planning to buy immediately. If you're a permanent resident or citizen, you might see less competition in certain price ranges. Conventional loans may become more competitive as the displaced FHA buyers will shift markets towards that side. Properties that would typically attract FHA buyers might see price adjustments. Now, whether you're buying or you're selling, understanding these policy shifts will help you navigate the changing market. For sellers, if your home is in an FHA-friendly price range, consider listing sooner than later. Highlight the features that appeal to conventional home loan buyers. Be realistic about how these changes might affect your home marketability. For buyers, if you're affected by the deadline, act now. If you're not directly affected, be aware of how changing competitions might impact your offers. So consider neighborhoods that might see valuation changes due to these policies. Now, I want you to note that the real estate market always finds equilibrium. Even with significant policy changes, buyers and sellers who understand these shifts can position themselves advantageously as the market adapts. My commitment is to keep you informed of these changes so you can make the best decisions for your real estate goals. The housing market remains resilient, but knowing when and how to make your move has never been more important. So do you have questions about how these loan changes might affect your specific situation? Let's talk about your options. Till I see you or talk to you, happy house hunting.